Mills is here to teach you how to do the most with your money and to make your dollars stretch a little further, and maybe some investment ideas as well. So before we get started, we have an amazing sponsor in Don Fallenbaum. Don, please introduce yourself. Tell us how we can prepare for this tax season if we haven't started that already, and let us know about the amazing services that you provide. Thank you so much for being a
Sure.
sponsor.
Thanks, Kevin. My pleasure as always. My name is Don Fallenbaum. I'm a CPA, and I specialize in the real estate space, helping realtors, real estate offices, as well as real estate investors. I'm here to help you as an agent for your taxes and your business structure, as well as being here as a resource for your clients as well. I have many realtor clients reaching out to me all the time that they have a particular client that needs help with a certain tax aspect of the deal they're working on, and I'm there to help them close the deal also. So with that said, today's presentation is making the most of your variable income, and my role is to help you have more of that variable income, so that Mills could help you stretch it and make it go a lot farther. So, and a lot of that is by, like I said, having the right business structure, whether it's a PA or an LLC, and also taking advantage of any and all deductions that are available to you, and making sure that you're also compliant, so you don't have any unnecessary penalties and love letters from the various jurisdictions that you might get and causes stress. So my job is to give you peace of mind, so you don't have to deal with any of that stuff and focus on what you do best, and that's real estate. So with that said, I will turn it over to Mills, and she will help you make that variable income and those commissions go as far as you can, and stabilize them in a 1099 type environment. It's very important to have the right planning and the right structure, and to have the right advisors on your side as well. And Mills is a great advisor in that regard. So I'll put my information in the chat, and I do offer free consultations, initial consultations, either via Zoom or phone, or even in person, whatever is more convenient. And you can set up appointments right from my website on a booking link. Looking forward to possibly seeing some of you in the future, and have a great class, everybody.
Thank you so much. Thank you so much, Don. So remember, if you haven't thought about your taxes, you don't have time for your taxes, Don will definitely have you covered. He has an amazing staff behind him as well, and you all your tax needs will be met, and he'll probably help you save a little more money than the TurboTax and H&R Block and things like that. I've definitely made the mistake of not using a CPA in the past, and as a result, my return most certainly wasn't as high as it should have been.
Yeah, the fees definitely pays for itself in most cases.
Very good, very good. Well, thank you, Don. Any final words?
No, just enjoy the class, and again, feel free to reach out to me, anytime, even just to pick my brain. I do offer, like I said, I offer a no charge initial consultation, and very convenient. Zoom. Just book it on your own, and if I can help you, I'll be happy to help you any way I can.
Thanks, Don. All right, Mills, are you ready?
I am ready. So do you want me to stop around the 1:30 mark to give our other sponsor? Perfect.
Yeah, that would be great.
Awesome. And if I forget, please just interrupt me and let me know. All right, let's go ahead and get started. So today we're going to talk about how to make the most of your variable income. For those of you that don't know me, hello, I'm Mills Bender. I'm the founder and owner of Mills Knows Bills. And today we're going to unpack what goals you're trying to achieve with your finances, and how you can make sure that you reach those goals, even though there might be some fluctuation in your commission checks month over month. Today, I'm going to give you a brief overview about what Mills Knows Bills is and who I am, how I got started. We're going to talk about mastering your money, so basically your financial goals, how you can achieve those goals through practical budgeting. And then we're going to take a deeper dive into those 3 steps of practical budgeting today. We're actually going to establish a budget, and we're going to make sure that you feel confident about your finances rather than confused. As I mentioned, my name is Mills Bender, and I started my financial journey in fall of 2014 when I found myself with only $1.50 in my bank account. As you can probably imagine, I had a plethora of different questions and emotions just overwhelm me. Things like, how did I get here? And how can I make sure that this never happens again? But as I started doing a deeper dive into my finances, I realized there was a lot that I just didn't know about. I had that you don't know what you don't know conundrum. And therefore, it was difficult for me to figure out where to start to take ownership of my finances. Well, over the past 7 years or so, I've gathered all of this information, and I'm giving you the place to start today, which is practical budgeting. Before we take a deeper dive into that, though, I want you to think about what mastering your money looks like to you. Think about it. Just, is it no longer waiting for that next commission check? Is it being able to provide for your child's education? Being able to pay off your debt and finally be rid of it? Whatever your response is, it falls within one of 3 different categories. The first one, no longer living paycheck to paycheck. Or in this case, no longer living commission to commission. A lot of times when I state this as a category, a lot of individuals think, well, that doesn't apply to me because I make enough money. Living paycheck to paycheck is normally not a make enough money problem. It's a manage the money problem. I'll give you an example. When I first started Mills Knows Bills, I sat down with a gentleman who was making well over $500,000 a year. And this person was still overdrafting on his bank account by $20,000 every month. This wasn't a make enough money problem. That was a spend too much money problem. That was a manage the money properly problem. So you see, regardless of where you are in your finances, living paycheck to paycheck can still apply to you. The next category is being able to pay off your debt faster. I don't know about you, but when I first started my financial journey, I was making payments, but never actually able to pay it off. I was on this hamster wheel of always paying it down, but never being free of it. There's a very simple yet impactful solution for that. And lastly, being able to reach your financial goals. This is the fun part, like being able to retire, buy that house, pay for your child's education, being able to take those vacations that you always wanted to take. So regardless of where your response or responses fall within mastering your money, in order to get on track to reach these results, you need to understand practical budgeting. And before we take a deep dive into practical budgeting, I will also be the first person to say that budgeting is not glamorous. If I'm saying this and you're cringing at this word and you're like, oh God, I'm gonna log off right now, please don't, okay? I have a very different approach that I think you're going to love and enjoy. I'm not here to tell you no. I'm here to tell you within reason. Think about practical budgeting like a belt. When you first put on a belt and you find that belt loop, maybe you make it a little too snug and you can't really breathe. It feels a little too tight. If you were to leave your belt loop there, it might not work. It might pop off and it might fall down, right? Your pants aren't staying up. The belt is not doing its purpose. However, if you put the belt loop maybe 1 too loose, you got too much wiggle room. Your pants still fall down. It's still not working. Just as you need to find the proper belt loop for your body, one that fits just right but allows you to breathe, you need to have the perfect plan, the perfect budget for your personal finances. You need to make sure that you're enjoying the present enough to where that budget and those savings goals are sustainable, but also you're not enjoying the present so much that you're forgetting about your financial future. So that's what we're going to do today. We're going to establish some practical budgets in all of your finances. Practical budgeting allows you to be intentional with your spending. It's not a matter of, I've always been spending this, so therefore I need to keep doing so. Instead, it's asking yourself, is this a priority in my life? What's more important to me? Practical budgeting also allows you to set and reach your financial goals. Oftentimes, those financial goals that we talked about, like retirement and buying a house and child's education, those are lofty dollar amounts. So how can we make sure that we can achieve those goals by embedding them as bite-sized pieces each month? And then lastly, practical budgeting allows you to understand your finances. It gives you the opportunity to see how much money you're actually earning, how much you can forecast to be earning, how much is going out. It gives you the opportunity to be strategic about how you spend your time as realtors. As I mentioned earlier, budgeting is not glamorous. I personally love it because I'm 100% a finance nerd. However, if you are still struggling with the idea of sitting down and looking at your finances, I want you to focus on the results. Budgeting is the tool that allows us to achieve those glamorous results of no longer living paycheck to paycheck, no longer struggling with debt, and the ability to reach our financial goals. So now that we have an overview going, I'm going to share my budget setting tool. We're going to actually set one together. Okay, making sure everyone can see my screen here. Perfect. So this is a copy of my free budget setting tool that I'll be emailing to everybody at the end of today. So if you've never seen anything like this, I encourage you to take notes and then go through the process of establishing a budget for yourself. At the top, you simply put your name. If you have a spouse or somebody else that you share your finances with, feel free to put their information here as well. If your significant other is a fixed income earner or they have more stable variable income, which I know is an oxymoron, feel free to input their information here because you'll see their name populate. However, for our conversation today, we're going to only focus on variable income earners. And oftentimes when I sit down with clients for the first time, their first answer when it comes to budgeting is, how do I actually set a budget when I don't know what I can count on each month? How can I make sure I can achieve those goals when I don't know if I'm going to have money to pay my bills? So for purposes of our conversation today, we're going to stick a pin in the income and taxes conversation. We'll work backwards instead. So for now, I want you to focus on living expenses. The living and debt expenses portion of your budget is considered your mandatories. These are items that you need to make sure that you have money for each and every month. So I'm going to go through and add some dollar amounts here. And as you're going through this exercise yourself, I encourage you to also include the monthly due date. This will allow you to identify if there's any items that you can automate. So that way you're not forgetting to pay anything. You can make sure you can take a look at your cash flow, basically when your commission comes in versus how much money is going to be coming out of that commission check. But for today, we're not going to put that information in. For things that are paid on an annual or semi-annual basis, I encourage you to include them in your monthly budget. For example, renter's insurance. If you pay $180 a year, create a simple formula where you divide that dollar amount by 12, and this will allow you to see what you would need to set aside each month to have that amount paid in full. $15 a month or $180 one time might not seem like a lot. However, I want you to think about all of the different pieces in your finances that have those random occurring expenses. Things like your business registration, your website hosting, your domain, maybe marketing expenses or your car registration. These are items that we often forget, but they add up. And if we're not expecting them or remembering them, they can often throw a wrench in our financial plan for that month. So rather than being blindsided, make sure that you are consistent with setting money aside. And that way you're not forgetting to have it on hand. So I'm going to put some information in here. I know in Miami-Dade County, I spend about $45 every 3 months. So I'm going to put that there as well. Groceries. That's a hot topic. A lot of people don't know how much they spend on groceries. There's a couple rules of thumb out there, but statistics say that an individual spends about $250 a month on themselves for groceries. That number can vary depending on how often you cook, what types of food you like to cook. For example, my husband and I like to weight lift and work out. So that means we're also getting supplements that we include in our grocery bill. So our grocery bill is actually a little bit higher than the $250 per person. We're more about $350 per person. So I'm going to put $250 for now. However, estimate what you might want to spend on groceries each month and then revisit it. See if that's realistic. Compare what you have been spending to what you're budgeting for. And now I'm just going to make a list of some items that people often forget to include. Dental insurance, life insurance, disability. Don't forget your car insurance. Your car registration is really important as well. Phone bill. Maybe there's some type of software you use for work. Maybe there's something that is only specific to what you do. Make sure you include those things as well. Gas is important as well, tolls. And I'm actually going to create a basic formula for gas too. Oftentimes when it comes to gas, and I'm sitting with a client, they say, I'm not really sure what I spend each month, but I know I spend $45 a week. So it's just 45 times 4, right? That's actually not correct. Because when you do 45 times 4, or when you're assuming that each month only has 4 weeks times 12 months a year, you're only allocating for 48 of the 52 weeks we actually have in any given year. You're foregoing 4 weeks of expenses. So a more accurate way for you to estimate your weekly expenses is to multiply that dollar amount by 52 and then divide it by 12. So you see, it's only a $15 difference, but that adds up. Once you've identified all of those business and personal expenses that are mandatory, either each month, each quarter, or each year, I encourage you to fill in the proper dollar amount and the monthly due date for each. Once you've done that, you've completed your mandatory living expenses. And now what we get to do is move on to the mandatory debt expenses. Let's talk about credit cards. When you are filling in the tool, you only want to include credit cards that you have a balance that is being carried over month. This isn't the situation where you use a credit card to cover your expenses and then you pay it off in full each month. You're using a credit card as a tool at that point. When we're talking about debt and credit card debt here, we're talking about those items where we're paying the minimums or maybe a little bit more than the minimum, but we're not paying it off in full each month, meaning that balance is accruing interest. So what I would encourage you to do is take a look at each of your credit cards that you have, write down the total amount outstanding, the amount that's due in total, take a look at that minimum monthly payment, include that here, add on that monthly due date, but most importantly, take a look at the interest rate. If you're not sure what you're being charged, open up your most recent credit card statement and just do a simple search function for APR. That will tell you what your interest rate is on that credit card. Why is this important? Well, for those of you struggling with paying off debt, organizing all of your debt is the first step in being able to create a debt payoff plan. Earlier during the PowerPoint, I mentioned how there's a very simple yet impactful solution to paying down your debt faster. I can link that in my email with the budget tool for you, so you can watch a webinar on that as well. But the other thing that's really important is understanding how much that debt is costing you. Why should you care? Well, if I said, Dawn, give me $25,000 and I'll guarantee you 100%, 25% return on your money, what would you say? And I know I'm calling you out here. You're on mute, my friend.
Okay, what was that again?
I said, if I told you, give me $25,000 and I'll guarantee you 25% rate of return, what would you say?
I would say that sounds really good. Let's talk further.
Right, exactly. Or if I didn't ask for a specific dollar amount, you might say, how much can I give you? Right? 25% of return is fantastic. When a lot of people are looking at their credit cards though, they don't view, or they don't understand how that 25% interest charge is costing them that amount of money. If you want to guarantee a 25% return on your money, 100%, you need to pay off those credit cards that are costing you that dollar amount. Because what that's doing is costing you money that you could be investing elsewhere and allowing it to work for you on your behalf. So, step one, organize all of your debt. If you have multiple credit cards, list them out by name. The other thing you want to remember is your car loan. If you have a car lease, that lease payment should go up in the living expenses. A car loan, you want to have down below here. So I'm just going to write in 250, 500. Let's say your interest is 5%. And lastly, let's add some student loans in here. Once you have gathered all of your different debt items, you have now completed your mandatory part of your budget. We put a pause on the income and taxes, and that's okay, but you've completed the mandatory living and debt expenses. This dollar amount, which I'll show you in just a few moments, is what we call your base goal. This is the bare minimum that you need to earn each month in your commissions to make sure you have all of your bare necessities covered. However, we talked about that belt loop. If all you're doing is covering your bare necessities, your belt loop's a little too tight. You're not breathing very well. You're not enjoying life right now. And you also don't have enough money to put aside for the future. So now we're going to take a walk through the extras in your budget. These are items that when you have money left over, you want to spend the money on these items. And they're also an opportunity for you to really make a difference in your financial future. It really allows you to plan and make sure that you're taking into consideration things that you might not have otherwise set money aside for. You'll notice as we're going through this exercise here that there isn't an area for you to add dollar amounts. I did that for a reason. And that reason is being when somebody is going through this budget setting tool and they have a fixed income, what they need to do is allocate what they have left over toward those extras. And we'll get there in the next tab. So for now, go through the exercise of adding all of those extras. Make sure to include things like hair care. I don't know about you other ladies in the room, but I only get my hair done twice a year maybe, but when I go, it's very expensive. Make sure you include those items. Don't forget about those subscriptions you have either, whether they were a free trial and you forgot to cancel it, or it's something that maybe you forgot you have and no longer use. For this section, I really encourage you to take a look at your credit card statements, your bank statements, and go through them line item by line item and see what you're truly paying for. Oftentimes, we forget we're paying for things, and that's causing us to feel like we're living paycheck to paycheck because we're not taking that dollar amount into consideration. Now that you have your extra expenses, this is where we really get to dream a little bit. These are the extra goals that we want to put money aside for. As variable income earners, an emergency fund is especially important. A lot of times when you hear of an emergency fund, some people think it's defined as a set dollar amount, maybe $1,000 or $5,000 or $10,000. I have a question for you. If you had $10,000 set aside in an emergency fund, how long would that money be able to last you? If you don't know for certain how many months that can last you, that's not the proper emergency fund for you. An emergency fund is 3 to 9 months worth of your total mandatory expenses. That's all of your living and debt expenses combined, which means it's not a one size fits all. The number of months, 3 to 9, is based off of you and your personality. That number multiplied by your expenses is based off of what you spend money on. So therefore, my emergency fund number is not going to be the same as Dawn's emergency fund number. When it comes to choosing a number between 3 to 9 months, that's dependent upon you. The way I approach it with my clients is, how long do you think you're going to need to come up with a backup plan if you were no longer able to work, or if you got injured, or if you had something come up? For me personally, I have 3 months set aside. I've lived through the pandemic where I was building Mills Knows Bills and had a full-time job at the same time. And as soon as the pandemic hit, I lost that full-time job. I knew that I could find another source of income while I was building my business within 3 months. How many months do you want to have set aside? What makes you feel comfortable? And then all you simply need to do is put that number in this gray box. I'm going to put 6. Let's just meet in the middle. And $26,040 is the total dollar amount that this person would want to have set aside. That's operating under the assumption that this is all of the debt items. We're going to assume that all of this is filled out as well, okay? But this is the idea that if something happens to them today, they know that they can have a roof over their head, food in their belly, clothes on their back, all of their mandatory bills paid for at least 3 months. 6 months, I apologize, at least 6 months. You see, an emergency fund has bought them time. Another reason why an emergency fund is so important for us variable income earners, though, is because what do we do when we make less than expected each month? How do we make sure those bills are still covered? That's where an emergency fund can come into play. It can supplement what you did earn that month and make sure that the cyclical nature of your income, although still cyclical, becomes less of a high and less of a low. It allows you to make sure that you're making your variable income as fixed as possible. Lastly, an emergency fund allows you to keep the progress you've made in paying down your debt. We'll talk about debt in just a moment, but a lot of times when I'm doing a webinar, I get a very, very common question, which is, if I have money left over, should I put that all toward debt or should I put that all toward savings? It depends. It depends. Honestly, you can have some great success with only $25 extra a month toward paying down your debt, and everything else should go towards your emergency fund. The reason why you need to do both at the same time is because if you've been making progress towards paying off your debt and something happens to your car, right? Let's say you pop a tire. If you have no savings on hand, how are you going to cover those expenses? You're going to put it back on that credit card. And all of the progress you've made goes out the window, and it's infuriating. It is. So give your future self a fighting chance by doing a little bit of both. It will make a huge difference in your financial future. Make sure you put any vacations you have coming up as well, or ones that you would like to take. Retirement, lead with the heart on this one. If you want to know more about making sure that you have the proper dollar amount set aside for retirement, feel free to schedule a free phone call with me. I can walk you through a very simple formula, but lead with the heart for this example. And lastly, add in all of those extra goals you would like to have. Once you have completely filled out the intake sheet, you're ready to go on to the budget template tab. This is, however, a perfect time to take a pause and let the other sponsor give their commercial.
Erica, you in the building?
I'm sorry, I'm in mute.
Okay.
Yes, I'm in the building. Oh my God, this information is so good. I'm literally enjoying it, and I really look forward to getting all that information. So for those of you who are listening to me, my name is Erica Enid Abreu. And I apologize. I don't want to share a screen. Let me see what I did. I'm not sharing my screen. Okay, good. I apologize. I'm trying to multitask here. So my name is Erica Abreu, and I am a partner at J&E Title Services. And we are a boutique title company with 40 years combined in the title industry and the title experience that we have. My partner, Jackie, she has closed many transactions, and many of them have been very difficult. So we can say that we can actually close those. And I have a marketing and sales background. And what I love is to help our agents or realtors to make more money, help them with prospecting, helping them with marketing. So we at J&E, we are very unique because we love to help you guys in anything possible. And at the same time, we go above and beyond for you and your customer. That's what we love to do here at J&E Title Services. Our offices is located throughout South Florida, and we can take your transactions from beginning to closing. So we're here to help you guys, make it happen the right way, and to provide your clients with the utmost customer service as possible. And at the same time, to provide the key to their American dream. So that's pretty much who J&E Title Services is. I know some of you that are joining this amazing training today. So if you guys need anything at all, you can reach me. I'm going to put my information as well there, but you can reach to us anytime. And we truly look forward to helping you guys on your next closing. And again, this information is amazing. Thank you, Kevin, and our amazing speaker for putting this together. Appreciate it.
Mills, back to you. Thank you, Erica, so much. Please, everybody, consider Erica for your next title services. She does great. Like she said, she has a ton of experience. She's been in the industry for a very long time. She has worked with, before she started her own title company, she's worked with a few other title services in the past. So she's taken the best out of all of those companies and put it into her own business. So please, J&E Title is fantastic. They were a sponsor of the 20 Under 40 Awards that we hosted. And Erica is always here for your needs. She's always available no matter what time you reach out. At least every time I've reached out to her, she's always been there and available. So please consider Erica and J&E Title Services. Okay, Mills, back to you. Let's learn more how we should save money.
All right, good stuff. So we just went through the intake sheet. Now let's bounce on over to the budget template tab. At first thought, you might be looking at this and think, oh my God, it says the word bad. It says bad because this tool is originally created for those fixed income earners. However, I want you to be excited about this dollar amount. I don't know about y'all, but as a variable income earner, there's almost a thrill that comes with not knowing exactly how much I'll make each month. It's something that lights a fire underneath me and gets me going. There's a benefit. Our income is not capped. However, there's no minimum normally either. So I want you to view this dollar amount as your base goal. Take this dollar amount, add an additional 30% onto it for taxes. 30% is a reasonable estimate when you're not exactly sure what you should be spending on taxes. But that's the bare minimum that you should be earning each month in your business. Taking a look at what you do on a day-to-day basis, your average commission check, right? How many closings do you need to have in order to reach that dollar amount each month? Is it 1 for you? Is it 2? The idea here is for you to figure out how you need to be strategic in your business. Now it's not, I need to close $4,500 a month. It's, I need to close 2 people each month, which means I need to go network at these different places. I need to set up strategic referral partners in these companies. It allows you to make the most of your time, so you feel like you're being strategic and you have a tangible metric to work towards. However, as we mentioned at the beginning of this presentation, there's more to life than covering the bare minimums. We want to be able to enjoy the present. We want to be able to set money aside for our future as well. So that's what the extras are for. All of the extras that we listed but did not have a dollar amount for previously are all right here. If you have a significant other or spouse that is a fixed income earner, you'll notice that as you allocate money here, the amount left over will dwindle. That will allow them to get as close to zero as possible. For us, we're going to see that number get larger. That's going to become our stretch goal. So let's take a look at those birthday gifts. Those are things that are random, right? I want you to take a look at how many people in your life you would want to spend money on for birthday gifts. Let's just say it's 5 people. And for each person, you want to spend no more than $50. That means each month you take that amount and divide it by 12. You need to be setting aside $20.83. This goes back to the renter's insurance example where we took the 180 and we divided it by 12. Why do we care to be nitpicky? Because it all adds up. I had a client who was not nitpicky with her finances and found that she was over allocating $1,200 each month because she did not properly make sure her finances were in line. This was causing her to put that money back on credit cards, and all of the progress she was making was negated. Nothing was actually being done. So be strategic. You can add in dollar amounts for those birthday parties, holiday gifts. This is the perfect time to start planning towards the end of the year. Let's just say $45 a month though. And then make sure you add in those other items that you know you probably do. Be honest with yourself. If you enjoy dining out, make sure you allocate money for dining out. Same thing with clothing and that hair care. Let's say you spend $400 every 6 months. Make sure that you're being honest with yourself and you're putting money aside for each category. When it comes to your emergency fund, a lot of people look at that dollar amount and they get overwhelmed because they feel like they need to have it yesterday. Honestly, it took me about 3 years to have a fully funded emergency fund of 3 months. So for every month you would like to have set aside, give yourself a baseline goal of giving yourself a year to get to that dollar amount. So in this case, we take that dollar amount divided by, I'm going to say 6 times 12 because we want 6 years, but we're going to do this on a monthly basis. $360 a month. Take a look at your budget. Take a look at your finances. Can you afford $360 a month? If you can't right now, put another dollar amount. Any little bit helps, but this is a good baseline if you're not sure where to begin. Let's say you want to set aside $200 each month for vacations. Retirement, let's say you want to max out your IRA each year, so $500 a month. You also are saving for a house and you want to put money aside for a new TV and a new laptop. So once you have fully filled out the budget tool, you now have what's called your stretch goal. Multiply that amount by 30% or add 30% to that dollar amount as well. You have what you need to be earning. Let's just round up and say 7 grand is your stretch goal. Now, how many closings do you need to have? How long does it take you from when you first start a conversation until they finally close and you get that commission check? How can you plan ahead and make sure that you're not only preparing for this month, but for future months? A lot of times people also say, well, what do I do if I earn more than the $7,000 each month? If you earn more than the $7,000, anything in excess should go directly to your emergency fund. This allows you to beef up that account to make sure when you make less than $7,000 a month, you can make sure that you hit those bare minimums and get to your stretch goals each time. Once you have your budget established, streamline it, automate it, so that way it's working for you rather than you working for it. Step 1, take a look at those mandatory expenses and put everything that you possibly can on auto pay. This will allow you to make sure that those items are getting paid and you're not forgetting to pay them and not accruing additional fees. The next thing I encourage you to do is pay these items, these savings, these goals, as though they are mandatory bills as well. Treat them as your rent. You're paying somebody else rent. Why can't you pay your future self retirement? If you don't have a retirement account opened already, schedule a free phone call with me, please. Please let me walk you through how to get that up and running. If you do have a retirement account already open, schedule an automatic account transfer from your checking account to that retirement account of $500 every month, or whatever your dollar amount is every month. For all those other items that maybe don't have a separate account, like your emergency fund, or items that are variable like gifts or vacations, maybe your goals down here, there's a couple different options for you. If you have QuickBooks, I highly encourage you take a look at QuickBooks Checking. QuickBooks Checking is partnered with Green Dot Bank, and they actually allow you to earn 1% of the money that's in that account. And the way QuickBooks Checking works is like an umbrella. So you send money directly to the main account, and then you can drip the money from that account into a variety of different virtual envelopes. Each envelope can be titled with the different goals that you have. So house down payment, TV, laptop. And you can make sure that you're putting that money, you're dropping it into these different accounts. So the money's not mixing. You're making sure that you are reaching your financial goals. You're not accidentally spending emergency fund money on the house down payment or vice versa. It allows you to have some structure and organization around your finances. If you don't have QuickBooks, or if you're not established as a business or for whatever reason you don't want to use QuickBooks, Ally Financial is an online bank that does something very similarly. Rather than getting 1%, you get 0.5%, but it's still a lot more than the typical brick and mortar bank. I don't know about you guys, but I earn like 0.01% of the money in my bank accounts. But Ally Financial has that general umbrella as well. For them, it's actually a savings account. It's called their online savings. And they have what's called buckets. And you can create up to 9 different buckets, I believe, each of which that has their own title, their own goal tracker dollar amount, and it allows you to stay on track. So once you've established this other entity, set up the automatic account transfer from where you get your commission checks to the umbrella account of either Ally or QuickBooks. Then from there, you will need to manually fund each of those envelopes. But in all honesty, that's the best part of managing your money, is being able to have the money to set aside for these goals. Step 1 in general today that I want you to walk away with: set a budget. Step 2, identify your base versus your stretch financial goals. Make sure that you know what you need to do to close those dollar amounts each month. Anything in excess of your stretch goes directly to your emergency fund to supplement those months where you make a little bit less than your stretch goal. Lastly, automate it. Make this work for you rather than you work for it. If anybody has any questions, I'm going to put my contact information on the screen here. I would love to chat with you, sit down, talk with you. You can check out other resources on my website, millsknowsbills.com. You can email me directly, mills@millsknowsbills.com. I'll put the link in the chat for the opportunity for you to schedule a free phone call with me, and that's also going to be in my follow-up email. You can also check me out on your favorite socials. You name it, I'm probably on it. But does anybody have any questions? And if no one feels comfortable voicing them, you can directly message them to me too.
There was one in the chat. Hold on, let me find it real quick.
Okay. Oh, you're on mute, Kevin.
Oh, somebody asked, thank you. Somebody asked, how about educational courses? Would you, would that be an extra?
In terms of business, that's where business and personal kind of overlap and get a little funky. I would actually consider educational courses a mandatory in my budget. I view that as continuing education because that's something that's really important to me to invest back into my business so I can become a better business owner. And if it's not every month, I would take a look at how much you spend on average and how often each year, and then set that money aside each month. That way, if an opportunity comes up, you have that money on hand and you're not struggling with making sure all other bills are covered. Very good question. Any others?
Well, I'd like to
Here.
chime in, thanks to our amazing sponsors, that education with YPN is free. We don't give you CE, but at least that would be something that would reduce your pay. So thank you, everybody, for supporting YPN education. Anybody else have any other questions before we go?
I did have somebody message and ask if there's any way I can share the Excel spreadsheet. Yes. So at the end of today, I'm going to be emailing everybody access to the budget spreadsheet, access to a webinar that takes a deeper dive in how to pay off your debt faster, as well as a link to schedule a phone call with me and any other resources that might be of assistance.
I also wanted to ask regarding donations, if you're donating to a nonprofit, would it also go under the donations bucket? But if it's tax deductible, how would we handle that?
So that's where budgeting and taxes don't necessarily align 100%. So budgeting, view that as your plan for your money, and then working with somebody like Don or another CPA, that's where you get to mitigate your taxes as much as possible. When it comes to putting your donations on your budget spreadsheet, you can put that either in the donations bucket or you can put that in your mandatory part. It really depends on what you view that as in your finances. But again, when it comes to your taxes and your tax strategy, a lot of things overlap. For example, I pay my rent, but I know a portion of my rent gets written off on taxes at the end of the year because I work from home. I don't get to see that benefit though until I actually pay my taxes. Does that make sense?
Yes.
Okay.
Yes. Thank you. Excellent.
Mills, there was another question asking all the services that you provide.
So my bread and butter is my one-on-one coaching program called Master Your Money, where I work with clients one-on-one. If somebody does not want the one-on-one experience, or if they cannot afford the one-on-one, there's a group version of that as well with open enrollment dates. The next cohort actually starts in April. And then besides coaching, we also have some online courses like Money Bootcamp and All Things Money, all of which you can see on my website, millsknowsbills.com.
Okay, so one other thing, since we're talking about budgeting, I would like to offer everybody free lunch. Now, there's a catch. Obviously, there's a seminar that goes along with it. But here, let me put this in the chat real quick. It'll take me 1 second. And it will be with our partners, Aria. They are hosting a class, or not a class, but a lunch and learn at Aria, the reserve, the residences. So I'll go ahead and put that in the chat now. If anybody wants to register for that, I'm including the link here. It's a Google spreadsheet, and then we'll submit that to Aria later on in the day. But if you're looking to save a little money, and learn a little something extra, that's definitely a great opportunity. So please join us on Monday. That is February 28th from 12 to 2. Anybody else have any other questions?
All right.
Well, Mills, fantastic job.
Thank
You
you.
put all of your contact information in the chat, correct?
I will put more contact information in the chat, yes. However, they'll also receive emails from me. I will mention, disclaimer, for whatever reason, my email goes to spam sometimes. So be sure to check your spam tomorrow to see if it went there, and make sure you report it as not spam. I changed over my email platform and it's acting a little funky. So please bear with me. I thank you for your patience, and I hope I can connect with you and help you along your financial journey.
Well, Mills, the good news is too, is we collect phone numbers, I believe, in the registration. So if it's easier for you to reach out via text, there's also that
works
option.
too. That works too. Absolutely. Okay. Well, good stuff. Thank you guys for letting me geek out with you today and share a little bit about what I love. I hope you walked away with some good information and feel more confident with your finances.
And Mills, where can they find you on social media?
At millsknowsbills.com on your favorite social platform.
Yep. And we're Miami YPN. Please follow us as well. And I hope to see everybody at lunch coming up on Monday. And until then, save your money, be great, and we'll catch you at the next YPN programming. Take care, everybody. Have a great day.
Get up on my way.